I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Bitcoin surges past $50,000 once again. And Coinbase isn't the only exchange riding the wave. Smaller rival Kraken is raising money at a potential $10 billion valuation. We'll speak to the CEO about where he thinks the market is going. Plus, SpaceX is preparing to launch its Starship SN10 for a high-altitude flight test. This is a spaceship the company hopes will someday bring cargo and people to the moon and Mars. There have been a few failed attempts over the last few days. We'll talk about the latest mission. And enterprise identity management company Okta is buying one of its leading but smaller rivals in a $6.5 billion deal. We'll speak to a lead investor in Auth0 about why now. We'll get to all of that in a moment, but first let's get a look at the markets. A sell-off in high-flying giants like Apple and Amazon outweighing gains in banks and energy. The NASDAQ 100 slumping to a 2-month low. Our Ed Ludlow has more. Ed, walk us through the day.
Yeah, the story here really is that big tech is still under pressure, and tech stocks one of the biggest declining by sector standards on Wednesday. You know, investors really take into account what rising bond yields means in the context of stretched valuations. We know that big tech had real outsized earnings growth in the most recent quarter. You see there, the S&P 500, which is the main gauge of US equities, down by 1.3%. But if you look at the NASDAQ 100, which is a really tech-heavy gauge, and the NYSE FANG Plus Index, that basket of mega-cap tech stocks, then really you see that the declines are coming from tech. Same with semiconductors and the Philadelphia Semiconductor Index, which is also under pressure on Wednesday. In terms of some of the specific names on the move, you nailed it, Emily. It's those big cap tech stocks like Apple, like Amazon, like Microsoft, who did see outsized earnings growth in their most recent earnings report. I also want to flag PayPal as well, down more than 5%. It was in the news on Tuesday, reports out there that it's in talks to buy Curve, the cryptocurrency storage and transactions facilitator. You know, a lot of interest around the future of cryptocurrencies in the world of e-commerce, but under pressure nonetheless today. And I want to focus again on Snowflake. This was one of the hottest IPOs, the IPO of 2020 back in September, but shares falling after earnings showed that its growth in sales really not where investors were hoping it would be. It did beat consensus estimates, but the hope was that you'd see outsized earnings growth from Snowflake of around 10%. We didn't quite get to that level. You see there the Philadelphia Semiconductor Index down 6% over the last 7 days, continuing to be under pressure as investors weigh the global chip shortage, which is impacting all kinds of industries, including automakers and computer makers. Emily.
Meantime, we're also watching for deals. You've been pounding the pavement in the autonomous car space. What are we potentially expecting to see there?
Yeah, this is an interesting one. According to sources, Cruise, which is the self-driving unit majority owned by General Motors, is in talks to acquire Voyage. Now, Voyage is really interesting because it's actually one of the few autonomous startups that's actually revenue generating. It's out there in the real world. It runs 2 pilot programs, one in Florida and one in San Jose, California, where it charges retirees, communities and retirement communities a fare. And if you take Cruise, which is valued at more than $30 billion post-money in its most recent round, that is not yet revenue generating, it seems like it'd be an interesting acquisition. Of course, we're very familiar with Cruise here in the Bay Area. You see their test vehicles all around, but they don't actually have a commercial service. So what we're hearing from sources is that they're in talks to acquire Voyage. They're in talks to learn from Voyage's experience in actually running a commercial product. But as we say in our Bloomberg News story, no done deal yet. And of course, like all talks, it could fall apart. Emily.
All right, Ed Ludlow, thanks for the roundup. We'll follow your reporting. Meantime, President Biden has agreed to moderate Democrats' demand to narrow eligibility for stimulus. But party leaders in the Senate are resisting a push to trim extra unemployment benefits. I want to bring in Bloomberg's Emily Wilkins with the latest. So, Emily, last-minute changes are being made to the legislation. Tell us what's changing and why.
So, Emily, this all has to do with those $1,400 checks. Remember that these are direct payments to Americans who make less than a certain threshold. And it's the thresholds that we're seeing change here. Now, remember, it's only Americans who make up to $75,000 or less who are going to get the full amount of that check. But above that, it begins phasing out. And it used to phase out all the way to Americans who made $100,000. Now it's going to be more targeted. It's only if you're an American and you make more than a single American making more than $80,000, you're not going to get this check under this new thing. That's an agreement for moderates, but for progressives, they got to keep their unemployment insurance supplemental. That's actually going to increase. Right now, it's only $300 per week. After this bill passes, assuming no additional changes are made, it will be $400 per week.
So when will the vote be?
That's such a great question. So right now, there's a chance that we could see things start moving tonight. Otherwise, we're planning on seeing them tomorrow. And remember, because Democrats aren't usually using the normal legislative process for this, they're in this situation where Republicans can offer a bunch of amendments to the bill. This is the vote-a-rama that you might remember from a couple weeks back. And so there might be a chance that amendments on this, could go from Thursday all the way into Friday, potentially into Saturday. You've heard Republicans say that they're going to offer numerous amendments, and you also have one Senator, Ron Johnson from Wisconsin, a Republican, who is at this point threatening to have Democrats read the entire 600-plus page bill. That's going to take 10 hours in and of itself. And so Republicans really can't block this bill at this point, but they are going to try to sort of inflict as much pain on Democrats during this process.
So let's talk about dates and, when you expect this might be passed. Talk about what's next.
So I think Friday, Saturday is when we're looking for the Senate to actually go ahead and pass the stimulus package. From there, it does have to go back to the House. Remember that the House passed this bill prior, but then the Senate made changes. The House will need to now approve those changes. We did hear earlier this week from one of the Democratic leaders, Majority Leader Steny Hoyer, who said that he is confident that the bill will be able to pass the House, even with some of the changes in the Senate, such as eliminating that $15 minimum wage raise and taking out several infrastructure projects.
All right. Bloomberg's Emily Wilkins will continue to follow your reporting. Thanks so much. All right. New York City says it could offer COVID-19 vaccines to all residents by late April, which would be vital to opening up the economy. This would also breathe some life into tech companies hit hard by travel restrictions, companies like Airbnb, Disney with their cruise line. Bloomberg's Joe Weisenthal has a look at some other comeback stories in the entertainment world. Take a listen.
Cruises, concerts, live music venues. While the businesses are not still at pre-crisis levels, shares of companies in this space have come absolutely rocketing back in recent months. Check out Royal Caribbean. So it's basically quadrupled off the lows back in March. Bookings already gathered steam, and this is before the virus is even really gone. Or take a look at shares of Live Nation near all-time highs. Remember, this was one of the first stocks to tumble about a year ago when fears of the virus really started to mount. These days, it's on a total tear. People are even ready to flock back to nightclubs. Look at shares of RCI Hospitality, ticker RIC. Unbelievable run, well above pre-crisis highs. So, the global vaccine rollout gathering steam, reopening optimism in full swing, more than 245 million shots globally administered to date. Some countries really making significant gains.
This is only the beginning, because we'll see more and more countries as we want to reopen our tourist sector, as we want to have our airlines functioning a bit more normally, is to fill them up with people who have been vaccinated.
Bottom line, the reopening trade is red hot, but if you think back to, say, about 11 months ago, there was all this talk about how bailouts and the Fed credit backstops, they were going to prop up all these zombie companies that weren't going to thrive in the new economy. Well, it turns out there was nothing really broken about any of these business models. They were just massively disrupted by a once-in-a-century pandemic, and it looks like consumers are ready to splurge on what they're offering yet again.
Our Joe Weisenthal there. All right, coming up, crypto's wild ride and the exchanges that make it all possible. We're going to talk about funding, regulation, and what is ahead for Bitcoin with the founder and CEO of the crypto exchange Kraken. Next, this is Bloomberg.
A decade ago, less than a cent. Now, millions of times higher. But what about Bitcoin's future?
Our fundamental work shows that Bitcoin should be worth about $400,000.
That it doesn't have any fundamental value.
People in the know just don't seem to know where it's heading next. Once the province of nerds, libertarians, and drug dealers, today the $1 trillion market is drawing millions from hedge funds and Wall Street giants. Bitcoin isn't the only crypto game in town, but it's the biggest and the best known. Bitcoin's first mega run was in 2017, rising from under $1,000 to almost $20,000, but then it fell off a cliff. It was mostly retail traders back then, as many in finance wouldn't trade Bitcoin in a hazmat suit.
If we have a trader who trades Bitcoin, I'd fire them in a second. For two reasons. It's against our rules, and they're stupid.
But today, it's gaining respectability. You can trade Bitcoin futures, and even JP Morgan thinks it'll hit 6 digits. But the most famous cryptocurrency still has its detractors.
As John Maynard Keynes once said, the market can remain illogical for longer than you or I can remain solvent. And right now, Bitcoin seems to me to be utterly illogical.
The question is, will Bitcoin continue to shoot for the heavens or come crashing back down to earth?
Bloomberg's Matt Miller there. Well, Bitcoin is back above $50,000, but can the momentum hold? The coin reached all-time highs last month as institutional investors began pouring in. Coinbase, the largest crypto exchange in the United States, also recently announced they would be going public through a direct listing. Meantime, Bloomberg is reporting that Kraken, another U.S.-based exchange, is in talks to raise new funding, which could more than double the company's valuation. With me now, Kraken's founder and CEO, Jesse Powell. Jesse, thank you so much for joining us. So let's start on the price. It's above $50,000 now. Where do you think it's going?
Yeah, thanks for having me. Of course, we can only speculate, but when you measure it in terms of dollars, you have to think it's going to infinity. Right. I mean, this national currency is only 50 years old. It's already showing extreme signs of weakness. And, I think pretty soon people are going to start measuring the price of things in terms of Bitcoin. And I think the true believers will tell you that it's going all the way to the moon, to Mars, and eventually, will be the world's currency. So we won't be measuring the price of Bitcoin in terms of dollars, but, in terms of, what else you're going to be buying with it, probably planets and other solar systems.
Okay, but let's try to put a number on it. What do you mean by infinity, the moon or Mars?
So, the people that are believers in Bitcoin see it's going to replace all of the world's currency. So that means basically whatever the market cap of the dollar is, the euro, all of that combined is what Bitcoin could be worth. I think, in the near term, people see it surpassing gold as a store of value. So, I think $1 million as a price target, within the next 10 years is very reasonable. To some extent, it comes down to the pace of which the U.S. continues to print money. Bitcoin has absorbed a lot of that inflation. I think people are increasingly looking to Bitcoin as a safe haven asset when the value of their quote unquote savings account, which is returning 0.0001% a year, which, is not even making up for inflation or even close to it, is looking more like a losings account. So, I think we're just going to continue to see more people pile into it. The younger demographic is certainly taking notice of it, and they see it as a better version of gold and something to protect them against all of this inflation that's happening.
Now, Jesse, we're reporting the round you're raising would put the valuation of the company at $10 billion. It could potentially double if there's demand. What can you tell us about that? And is that a step towards going public?
Yeah, we're certainly on track to go public. We've had a lot of inbound interest in financing and in people buying shares in the company. Personally, I think $10 billion is a low valuation. I wouldn't be interested in selling shares at that price. So, we're talking to a lot of interested parties. We may end up doing a primary financing. The company is cash flow positive. We got a very strong balance sheet. There's not really a reason to raise new capital other than possibly to accelerate the pace of acquisitions.
So when might you go public? Coinbase obviously just filed for their direct listing, and there's a lot of momentum.
Yeah, so it's something that we're exploring, probably not this year, possibly next year. We've got SPACs lined up around the corner, beating down our door, looking to do something with us. I think, that's an unlikely, I think, possibility for us, just given the size of the company relative to the size of these SPACs. So we'll probably do, a direct listing, well, hopefully sometime next year, but no guarantees.
Now, of course, Jesse, there are the skeptics, including potentially even the guy who's going to run the SEC, Gary Gensler. One of our Bloomberg opinion columnists wrote it this way. I just want to read it to you. There's a saying that the best way to make money in a bubble is to sell pickaxes to the gold miners. That is Coinbase's business. But Bitcoin exhibits a lot more fragility than true believers admit or realize. Bitcoin is all about confidence, and confidence has a funny way of disappearing in a flash. Does the fragility concern you at all? Does the uncertainty make you waver?
No, it doesn't. It doesn't make me waver at all. The Bitcoin programming has been the same. There have been very minor upgrades over the last 10 years that just make it more robust. The adoption has increased steadily over time. The system has just continued to prove itself. So I'm not worried about the price going up or down day to day. I mean, if you look at the 10-year chart, right, it's outperformed everything else in the universe. So in my view, I'm a long-term holder. There's no reason to sell Bitcoin. And I think a lot of other people are just waiting to buy the dip. These hodlers of last resort, they call themselves, there are people who will never sell their Bitcoin, and they're just waiting, to be able to spend it. So I'm not worried about it. I think there are a lot of weak hands out there. They come in, they day trade, they don't really understand the fundamentals of Bitcoin, but I think there are enough people out there now that see that Bitcoin is the future and are holding long term. And I do think if you're buying into Bitcoin out of speculation, then you should be committed to holding for 5 years, because the price could move up and down 50% on any given day. And you have to have strong conviction to hold through that.
Well, we launched our show 10 years ago, and if you bought $100 in Bitcoin back then, it would be worth $5 million today. Jesse Powell, Kraken founder and CEO, we will keep our eye on you. Thank you. All right, coming up, more of Bloomberg Technology. Okta making a big buy, $6.5 billion in an all-stock deal for Auth0. We'll talk to an early investor in Auth0 next. This is Bloomberg. Okta says it'll be buying Auth0, an authentication software company, for $6.5 billion in an all-stock deal. The deal said to represent a true, quote-unquote, home run for Auth0's early investors, including Bessemer Venture Partners. David Cowan of Bessemer joins us now, and an early investor in Auth0. So Auth0, interestingly, is a rival to Okta, though a much smaller rival. David, why do you think this deal makes sense?
Well, the identity management market is a very big market. Think about everything that has to do with how you identify yourself to any kind of computer asset. And Okta's really been the leader in helping big companies deal with all the different applications they have. So think of things like single sign-on, where an employee can use one password to get into all of their enterprise assets. Okta's really excelled in a different aspect of it, specifically helping developers build advanced trust features into their applications. Security can no longer be an afterthought. There's all kinds of things that now we see in a login page, like password resets and multi-factor authentication. And Auth0 is really the leader in doing that on an outsourced basis in the cloud for developers as they write new applications. And so really, this is a combination of two identity leaders who have been addressing different aspects of the same market.
That said, Okta shares are down 10% after hours. They just reported earnings. And of course, on the back of this deal, what do you make of that?
Well, anytime you see a mega deal like this, it's pretty common for the acquirer's stock to drop, especially when they're paying such a premium for the company they're buying. I think it's just going to take a little bit of time for the market to understand the strength of the combination.
Meantime, a lot of new avenues or paths for companies looking to exit, whether it is a DL, which Coinbase is doing, as we just discussed, or SPACs. What's your take on this trend? I mean, obviously, there are the critics who say this is a way for subpar companies to make a lot of money for their sponsors.
Right. Well, a SPAC is just another way for a company to go public. And clearly, it's a way for companies to go public at an earlier stage in their development. In many ways, it's kind of like what we saw in the dot-com wave in the 90s, when the markets were clamoring for access to earlier stage, higher growth companies. And in many ways, SPACs are just like an IPO, but there's a big structural difference, which is that before the business is acquired by the SPAC, before it is really public and available to be bought, there is a roadshow, just like in an IPO, where sophisticated institutions look at the deal and make sure they like the deal. But in the case of a SPAC, the SPAC is able to share very long-term projections with those institutional buyers. And so it really is very suitable to companies who maybe have no revenue today, but they have ambitions to develop some very, very important technology that 5 years from now could generate $1 billion in sales. And so, there's nothing inherently evil or great about SPACs. If you're thinking of investing in a SPAC or in a company post-SPAC, you have to look at the business and see if it's a good business. It's reasonable to expect that some of these SPACs are going to disappoint, and we'll see a pushback like we saw in the burst of the dot-com bubble. But many of these companies will be very important. I mean, keep in mind that one of those dot-com companies was Amazon, and today they're still doing pretty okay.
All right, we're going to be talking about a space SPAC coming up, a company called Astra. I know that's a space that you are invested in as well. David Cowan, partner at Bessemer Venture Partners, thank you so much for stopping by. We'll continue to follow the Okta Auth0 deal. In fact, we're going to be interviewing Okta CEO Todd McKinnon tomorrow right here on Bloomberg Technology. All right, coming up, Oscar Health going public in a deal that values the health insurance startup at about $7 billion. Not a startup anymore. We're going to hear from co-founder and CEO Mario Schlosser from the trading floor. Next, this is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Oscar Health, the health insurance company co-founded by Josh Kushner, is off to a bumpy start after its trading debut on the New York Stock Exchange, raising $1.4 billion in its IPO. Bloomberg's Scarlett Fu spoke with co-founder and CEO Mario Schlosser earlier today.
If there's one maxim we always live by in the company, it's we always choose the hardest path. We choose the most difficult healthcare system, the United States healthcare system, the most difficult healthcare segment in the United States, built our own technology stack, kind of went after member engagements to drive that high, which is the sort of uncracked code, I think, in the healthcare system in many ways. And I felt the same way when we decided between how do we go public. We thought we should go the traditional route, the route that requires the most disclosure, that lets us tell the story best and to as many people as possible. And that's where we are today. And I'm glad I think we did it. It's not an easy process, but it was a great one. I think I love demoing the products and showing what Oscar does. And I could do this many, many times in the last couple of weeks.
Yeah, you sound like you have still so much energy for the rest of the day, even after this long, grueling process. Now, by listing through a traditional IPO, you actually get to build up relationships with banks and bankers. And I saw that there are 10 banks that underwrote your IPO, led by Goldman Sachs, Morgan Stanley, Allen & Co., and Wells Fargo. What specific financial and strategic benefits or flexibility does that give your company?
So the bankers know the investor world. I would really say it that way. They are investor whisperers, if you will. They know who the big shareholders are. They know how they act. They know who to sort of trust, if you will, right? They know who will hold the stock the longest and who's in it for what reason, who's doing what in the capital markets for what reason. That's what I found the most useful, to really understand, okay, do you want this investor, that investor? We really want to close this particular group of people in the stock. And so I think the thing I'm the most proud of now since last night is we can finalize allocations, and I think we have a fantastic group of people who who now own this stock, and I think that they will be with us for many, many years to come. I told this story before, but when we decided back in 2012 who the first investors for Oscar should be, we didn't let anybody in who couldn't catch it on a napkin what their vision for the US healthcare system would be over a decade or two. We're almost at the end of the first decade now. We're 8 years into this now. We want them to be with us for the next decade, and that's how we chose it. And I think that's the value the bankers bring in this.
Interesting. And of course, by going public in the global pandemic, you were holding roadshows, but they were all Zoom roadshows as well. Talk about the challenges of that. Did it bring any specific benefits as well?
I mean, one benefit certainly is you're not in a plane, you're sitting. I was actually in the otherwise closed Oscar office, right, in a room by myself. The CFO, Sid, was next door in a different room, right, sort of like really socially distanced. We could do a lot more meetings. You're basically, in one meeting, you do an hour of demoing and of talking, then you kind of go off the phone for 15 minutes, half an hour, and you're in the next meeting. And so that, I think, was a grueling schedule. But I love it. I mean, I might be the only CEO in the history of roadshows, I think, that runs his own slides from his own laptop, his own computer, because I demo Oscar as well. I switch between the slides and the product demo, and I pull up dashboards. I can pull up some code if I have to, right? I want to show that we really have built something really amazing and cool here. So that's the advantage. The disadvantage, I think, is that it's a lot of work for sure, and you see a lot of folks and tell the story many times. But I don't think we'll go back to the days of where you have a plane, fly around the country, and collect money that way. I think that's gone.
Now, in your prospectus, you and your co-founder say that you created Oscar because of your own frustrations with the U.S. healthcare system, which is bigger, more expensive, and has worse outcomes than other rich countries. So what is the single most important way in which Oscar creates better outcomes?
I think what we have done uniquely well is we have built member engagements higher than anybody else out there. So members look for new physicians through Oscar. They can pick a primary care physician in the Oscar Medical Group, in the cloud, so to speak, a virtual doctor. We put different drug tier designs out there. And everything we build inside the company is geared towards getting you more affordability in the care that you have.
Oscar Health co-founder and CEO Mario Schlosser there. And sticking with their IPO, it's been quite a payday for Josh Kushner's Thrive Capital. Kushner, of course, is the brother of Jared Kushner, former President Trump's son-in-law, who controls 32.9 million shares worth, almost $1.3 billion through his venture capital firm. It's part of a group that also includes Founders Fund and General Catalyst that put $40 million into Oscar Health's initial fundraise. I want to bring in Bloomberg's Tom Maloney, who's been covering this for more. So, Tom, shares, though, ending today down almost 11%. What do you make of that reaction?
Yeah, look, it's unusual. I mean, we've seen so many big IPO pops lately, especially among these kind of trendier firms with a bit of a tech angle. So I think it was unexpected. I mean, the company is still worth $7.1 billion, so it's certainly not a bad result. But, it was unusual to see a drop after an IPO like this.
Elaborate on the Kushner connection here.
Yeah, so look, obviously Jared Kushner is Donald Trump's son-in-law, is one of his key advisors. Josh Kushner, who's a co-founder of Oscar, is Jared's younger brother. He runs Thrive Capital. It's a venture capital firm that manages about $9 billion. Jared actually used to be on the board of Thrive as well, but left when he joined the Trump administration. And Thrive owns about 20% of Oscar. The connection's interesting as well because Oscar really set itself up to work under Obamacare. It sells a lot of policies through the healthcare marketplaces. And of course, dismantling that program was really a major focus of the Trump administration, but they weren't able to get that done.
So what is your outlook on the company and Thrive in general, especially under a new administration?
Excuse me. Well, I think they sort of talk about the Biden administration potentially being a more positive catalyst for the company. Excuse me. And so I think that they feel like, on Obamacare, they sort of turned the corner a little bit. And that's probably one of the reasons why the IPO is happening now. Under this new administration, they feel like there's a little bit more certainty in the healthcare marketplace. I think it's still a challenge for the company. They've never made a profit like a lot of other, tech companies have history of losing money. They made their losses increases last year by about 50%. So it's still a challenging environment. Healthcare is a very challenging environment. But, I think obviously they're focused on their tech platform as a differentiator, and they really feel like they're trying to bring a better experience to customers through that.
Right. All right. Well, we'll continue to follow. Bloomberg's Tom Maloney, thanks so much. Now, coming up, the first rocket company since the 90s to announce they're going public. We're going to hear from the co-founder and CEO, Chris Kemp, about details around the deal. And SpaceX's Starship scrubbed its flight test earlier today, with the next launch expected potentially today as well. We're going to take a look at what to expect next. This is Bloomberg. The space race is back, with more companies and investors looking for ways into the industry. Astra is the first rocket company since 1990 to announce it will go public via SPAC. We took a look at the company and when space is expected to be profitable.
15, 13, 12.
From home garage to full-fledged rocket company, Astra is the latest upstart looking to make its name in the space race with big ambitions. To ramp up to a rocket launch a day, delivering things like satellites, supplies, and other cutting-edge technology to space within the next 4 years. To raise capital and fast, CEO Chris Kemp plans to capitalize on the SPAC craze and take the company public this year in a merger with Helicity, run by billionaire and former telecom mogul Craig McCaw.
Astra wants to be the most efficient and fastest way to get to space, and so it would be natural that we would want the most efficient and fastest path to markets as well.
Astra would be the latest space SPAC since Virgin Galactic, which merged with Chamath Palihapitiya's Social Capital in 2019. Astra, though, wasn't founded by a billionaire. It started operations in a San Francisco garage with limited funding. The company now designs, tests, and manufactures a line of small, relatively cheap rockets at its current factory just over the Bay Bridge in Alameda, California. A former naval base, now home to Astra, served as a jet engine research facility and gained popularity as the site of Discovery Channel's Mythbusters.
It's a place where it was really just designed for rocket manufacturing and rocket testing. And so the city and frankly the whole community here has really embraced Astra over the past few years as we've taken this campus, we've renovated a bunch of old buildings, and we have about 20 acres where we can really build and scale the business without actually having to move.
The team occupies 250,000 square foot research facility where researchers, engineers, and scientists can all work under one roof, eliminating the need for complex logistics.
That was really one of the game changers for the team, because it meant that we wouldn't have to travel to another facility or go out in the middle of the desert to go and test everything. So the engineers can really design something, make it right here, walk across the street, test it, take, learn, redesign, remanufacture, retest. And there are cases where we've done that twice in one day.
In December, Astra successfully launched their 3.2 rocket from the Pacific Spaceport Complex in Kodiak, Alaska, but nearly missed its orbit target. Kemp has said some minor tweaks should solve the issue and allow Astra to fly again this summer. SpaceX is currently the dominant maker of large rockets designed to carry thousands of pounds of payload to orbit, but it comes with a cost, charging roughly $60 million per launch. By comparison, Rocket Lab, founded in New Zealand and now headquartered in the US, starts at around $6 million a launch. Astra is now only capable of smaller payloads than both companies, but will charge just $3 million per launch.
Over the next few years here at this facility, we'll be increasing the production rate of rockets from monthly this year to weekly in 2023 to bi-weekly in 2024 to a full daily production rate in 2025. And by launching a rocket a day, we'll be able to bring the price point down to about $500,000.
The first and last rocket company to go public was Orbital Sciences Corporation back in 1990. It's since merged into a subsector of Northrop Grumman. Astra will be the only publicly traded company focused solely on building and launching rockets when it begins trading later this year, if Kemp can execute his big vision.
As I look 50 years into the future, I see a platform emerging in space. And right above that thin blue line, I see competition, I see ecosystems that are global, I see standards emerging, and I see a really exciting opportunity for a $1 trillion+ economy.
As more and more players join the space race, opportunities will become abundant for investors to enter the arena. But questions still remain around when the industry starts making money. Morgan Stanley believes the global space industry could generate more than $1 trillion in revenue or more in 2040, up from $350 billion right now. Over half the growth coming from satellite broadband technology. And as rocket launches get cheaper and more companies look to commercialize space, profitability may soon be taking off.
One to watch for sure. All right, SpaceX, scheduled to launch their Starship rocket earlier, aborted the flight test due to limiting thrust factors. We're standing by now for another test of the rocket within the next hour. Joining me now are Ed Ledlow, who's been covering the launch. Ed, what is the latest?
Yeah, so they tried an initial launch earlier in the day, and one of the thrusters failed essentially during ignition. You know, a lot of this process is autonomous because the whole point is that the vehicle has to be able to launch, enter Earth's orbit, refuel, travel 6 months to Mars, land, and then take off again autonomously, you know, using onboard artificial intelligence and compute. And that's what happens. So they'll go for a second attempt. But the context here is this is just an incremental step. Sending Starship just 10 kilometers, 6 miles above the Earth is a step towards a much bigger project. They are very much in research and development phase. You know, back when they were only sending Starship up 150 meters, I remember getting incredibly excited, but there's still a long way to go in the context of what the Starship project is. And as Elon Musk has very publicly said, there's only ever a 50 to 60% chance that they'll successfully send it up and get it back down again. And really, it's about learning around the economics of this, which is making the rocket fully reusable so that it's a cost-effective means of interplanetary transport. How about that, Emily, interplanetary transport?
Right, indeed. We'll be out there with Bitcoin as well if it goes to the moon and Mars, as Jesse Powell said earlier. What would happen next if they can get to, I believe it's 32,800 feet, they're trying to get to in this high-altitude test? Then what is the next step?
Yes, so we have a few hints to go off. The first is that at some point in the next 2 years, which seems a long way away in the scheme of things, SpaceX do want to send a test vessel, an unmanned mission to Mars. That's the first thing. Elon Musk has also talked about the first manned or crewed mission being in around 2026. So that's the kind of time frame that we're talking about. But as you know full well, Emily, Elon Musk does have a tendency to overpromise and underdeliver. What's really interesting is in this incremental step I'm talking about, it's actually very different to how the vessel would travel to Mars anyway. What SpaceX eventually plans to do is send Starship up into Earth's orbit on a booster, then send a second vessel, which is a refueling vessel, straight after it. The Starship would then dock in Earth's orbit with that refueling vessel, get more fuel, and then from that point, launch from Earth's orbit and take the six-month journey to Mars, where it would then land autonomously and hopefully refuel on Mars before heading back, which I'm sure there are some details there that SpaceX has to iron out. But that gives you a sense of the work that still has to go into this.
Ed, are you interested in going to Mars like Esther Dyson, who told us she was ready to retire there?
What is it that Elon Musk said? That he wanted to die on Mars, not on impact. And I think that says everything. You know, there is this ambition for humans to travel to Mars. It's a big part of what Perseverance is doing, the rover, right, that's currently on Mars's surface. One of the experiments that it's doing is using the atmosphere's carbon dioxide and turning it into oxygen aboard the rover itself. There's a lot of astrobiology that has to take place. But that is the ambition here. It's actually at the core of SpaceX's long-term mission. There's a lot around Starlink and space-generated internet connection. There's a lot around commercial payloads, a lot around the work that SpaceX is doing for NASA. But if you just go on their website, it's clear as day that the mission here is for human space exploration and specifically for interplanetary travel. If it goes a few times successfully, I might consider it.
All right, we'll hold you to that, Ed. I think you'll have to ask me again in 20 years because I'm not quite ready. Thank you.
Fair enough.
All right, Ed Ludlow, as always. Okay, still Ed. People are paying millions for digital sports trading cards that can be viewed for free. We're going to talk to the CEO of SoRare, an online fantasy soccer startup that lets fans own and play blockchain-powered digital collectibles like a rare and unique work of art. That is next. This is Bloomberg. Benchmark, the venture capital firm that was an early backer of Uber and Twitter, recently led a $50 million investment into SoRare, a global fantasy soccer network where fans can collect, buy, trade, and manage a virtual team with digital cards. SoRare uses blockchain technology that helps collectors exchange them on several digital asset marketplaces. Other investors in the round include Reddit co-founder Alexis Ohanian, as well as angel investor Gary Vaynerchuk. Co-founder and CEO Nicholas Julia joins us now from Paris, where the company is based. So your goal, Nicholas, is to become the game within the game. How exactly does this work?
So yeah, simply put, you can collect these NFTs, which are unique digital goods, and then you can play them in a compelling fantasy game. So we have this bridge with the real world, where you have an impact on the real world, and you can not only collect these unique digital goods, but also play them. So this usage value brings a lot because it's not just collecting; it's playing with these NFTs.
Now, last month you sold the Cristiano Ronaldo card, which I guess was a record sale, $102,000. I want to talk a little bit more about NFTs, these unique tokens or digital assets that generate value simply because they are unique. There are critics who say that the NFT market is just another speculative frenzy that will fizzle. What's your response to that?
Yeah, I mean, for sure, there's a lot of interest. Like regarding our soccer collectibles, we sold just last week more than $12 million of this, NFTs. But there's also a utility value to them. So the utility value is within the game. So for us, we put the game first. So building a compelling game so that you just not invest and collect in this NFTs, but you have a usage value, and we have crazy retention rates. So it's more than 70% of the users, of the fans that keep on playing after 3 months. So this is really important for us. And you can consider this NFTs as well, that's the second point, as an access to real world experiences. So maybe if you own, the token, the NFT of Cristiano Ronaldo, you can have a discount to go to the stadium, or you can access unique experiences to chat with him. So it's way more than investing or collecting. It's also unlocking digital and real world experiences.
So you recently partnered with the game maker Ubisoft. Tell us a little bit more about the deal and what it means for the fantasy soccer community.
Yeah, what is really new and game changer with this NFTs? So the first thing is the digital scarcity. So now you can collect something digital for the first time. But the second thing is also that we break the boundaries of existing games. So today, if you buy a skin on Fortnite or a card on FIFA, the video game, you can only use it in this specific game. So you don't really own your game item, you're locked into an ecosystem. With our cards, you can move them freely. So it's like a physical item. If you want to use it in our game, that's fine. If you want to use it in other games, that's fine too. So yeah, yesterday Ubisoft released a game leveraging our cards, and there's dozens of other experiences built on top of our cards. So it's a platform. It's more than collecting, more than a game. It's a platform.
So just about a minute left, Nicholas. Soccer not as big here in the U.S. as it is in Europe, South America, and certainly the team's not as good either. But what are your plans to expand your reach here?
Yeah, so we already partner with more than 130 clubs across the globe. So in Europe, Asia, Latin America, and Major League Soccer players are part of our platform too. And 20% of our revenue already comes from the US. So soccer is growing fast in the US, and so that's a very important market for us, and it's the biggest sport in the world. So it's 4 billion fans. So it's very important for us to grow the interest for the sport in the US, because the culture for collecting cards and for playing fantasy is already here.
Well, it's a fascinating slice of the fantasy sports world. We'll keep watching. SoRare CEO Nicholas Julia, thanks so much for joining us. And that does it for this edition of Bloomberg Technology. Tune in tomorrow. We'll have Todd McKinnon, CEO of Okta, talking about that big deal they announced earlier today. Stay tuned. This is Bloomberg.